The rupee has hit a record low against the dollar, surpassing that 77 mark to the dollar, and this has come against the backdrop of persistent sell-off in global markets amid rate hikes that we have seen from global central banks. Last week, RBI hiked interest rates by 40 basis points and it was out of turn hike, and we saw the Federal Reserve also hiking interest rates by 50 basis points, which is the largest hike in over 2 decades, as the central bank looks to tame stubborn inflation, which is now hovering at multi-decade highs in America. Now, foreign investors tend to turn sellers as interest rates head north and the rupee depreciates against the dollar, because this erodes their investments in Indian assets, and therefore we have seen rate jitters as well as weakness in rupee compel FIIs or foreign investors to pull out funds from the Indian equity markets. Now let's take a look at how the rupee weakness impacts an overall economy as well as what kind of an impact will it have on you. Now, a rupee weakness comes as a boon for exporters because they will get more rupees in exchange for dollars, and therefore it will increase the export competitiveness for India as a country. But when it comes to importers, they will have to shell out more for their import bill for crude as well as other items, and that will have a cascading impact on prices of local items as well. So if there is an increase in the import bill for fuel, we will see an increase in fuel prices as well as articles as well, because of the transportation costs going up. Meanwhile, if you are planning to pursue education abroad, well, this will come as a setback for you because you will have to shell out more for overseas education. Same goes for travel. You will have to work on your budget and revise it upwards because of strength in the US dollar. But when non-resident Indians are remitting money back home, they will see a jump in value when the foreign currency is converted into rupee terms, and the same goes for NRI investments into India. They will see a jump in value of their investments in the country due to the weakness in rupee. Rupee weakness spells bad news for any kind of debt raised via overseas markets because it will increase the cost of servicing interest as well, because if the government borrows from overseas, well, it will have to shell out higher interest payment, and same goes for corporates. If they are raising funds via global debt or via overseas debt market, they will have to shell out more towards interest payments. Now, the rupee weakness spells more bad news for the Indian economy, which is already reeling under the impact of high crude prices as well as high food prices in the aftermath of the Russia-Ukraine war. And we have also seen a global supply disruption causing issues for the global economy as a whole.